Hey there, speculators. It's Rod, your Futures Fanatic. Welcome back to the channel. Well, we got a little bit of momentum. Added about 1,800 new subscribers recently because I actually posted some videos. Thank you very much if you have recently joined. So I want to use this opportunity to get back to what I'd like to do, which is teach and train about actual tactics and real things that have to do with trading and not talk as much about some of the other topics that I've been discussing. So what I decided to do is take about 20 different videos that I have that are part of courses and training that's part of my community, and I'm just going to post it all on YouTube for free. So the first one I wanted to post is called about the Graceful Exit. I call that dynamic trade management. You hear this all the time, you know, let your winners run, cut your losers quick, but no one gives you a systematic, repeatable, measurable way to do that. That's what I talk about in this video. So please do like, subscribe, turn on the bell notifications, leave a comment, and I'll post more stuff like this that doesn't have the word apex or prop trading or scam or something like that in the title. So let's get into it. Hey there, speculators. In this lesson, we're going to talk about a very powerful but simple dynamic trade management technique that I call the Graceful Exit. Members of TDG, the Traders Dev Group, and the PTR Pro Trade Room will know this because I mention it quite frequently. But in theory, you should not be implementing this all that often. If you're finding that you need to do this, which is gracefully exit, take a scratch or a smaller loss than your maximum adverse excursion, then you probably also need to work on your strategy. But for today, we're not going to be talking about the strategy, but I am going to look for the example just today of the MNQ, because today was actually a day, I remember most of these trades. Normally when I do these videos, I like to just go back way in time, so I don't really remember the trades, and then it's sometimes better. But there was one particular graceful exit opportunity today that I just wanted to point out on some of these trades here. So first of all, what is a graceful exit? So a graceful exit is when a particular criteria is met. That's a discretionary criteria, which I'll talk about in just a moment, where you shift from looking to have it hit your target or stop to a more dynamic trade management approach, which is, okay, I now need to go into graceful exit mode. In other words, I'm trying to get out of this particular trade. Now, what is the criteria? So there's two criteria that I use. The first is, did the trade immediately go against me? So I'm long, it immediately starts to drop. I'm short, it immediately starts to go high. Immediately, I don't know, is that a minute? Is that 30 seconds? Is that 5 minutes? You have to make those determinations. Depends on how often you trade. If you're an active trader like what we do in the PTR Pro Trade Room, then you're going to find that you'll be, depending again on, your mileage will vary, but I'm often for training and education purposes in quite a few trades. So for me, immediately is generally pretty quickly, like almost immediately. When I get short or long, the trade starts to go against me. Now, the next criteria is it significant? Now, this is the one that's pretty tricky, okay? So I get long the S&P at 4,800 and it starts to immediately fall. Now, how far? How far before I start to say, is there an opportunity for me to gracefully exit? So the thing that's powerful about this technique is that it gives you an actual systematic, repeatable, mechanical way in which you can do something that everybody always talks about, but no one really explains how you can put it into practice. And that is, how do you let winners run and cut losses quickly? Well, if the trade immediately went against you, that's your first criteria. You're going to quickly try to look for a way in which you could exit it. The next one that's more tricky is it going significantly against you? So for me, I just use that very discretionarily. But I understand that doesn't work for a lot of people. It doesn't work for most of our beginning and even intermediate traders because they haven't enough screen time to sort of do that. They're like, you got to give me a criteria. So I'll give you a few criteria. The first you can use, and the most important, is your daily risk budget. How much of this particular trade, I just went long at 4,800 and it's now fallen 15 points and I'm long 2 contracts, which is $10 a point in the MES, the micros. That's $150. For some of you, that might be your entire risk budget. So by that time, you should have definitely been looking to exit, or you just would have had to take a stop. So for me, I like to use a little bit of situational fluency and discretion, but here's some techniques you can use. The first is you can say, if any trade is more than 50% of your daily risk budget, and we'll cover daily risk budget in different videos, you should have already, by the time you're watching this video, have seen or understand what your daily risk budget is. But let's just say your daily risk budget, which is your amount, the money that you can lose for the entire 23-hour session or entire session that you're trading, if you trade for 90 minutes or if you trade for the whole day. It's all the money that you can lose during that particular session is $250. And you have a trade that is now $125 against you. That certainly qualifies to look to gracefully exit, okay? Others can use 20% ATR. Again, there's some foundational stuff that you need to be aware of. What is 20% ATR? I'm not going to go into that right now. You can watch some of the previous videos. Make sure you understand how to use the ATR, the average true range. We happen to use a 7-day ATR, which gives us a value right now. As the time I'm making this video, the S&P will normally be between like 40, 50, 60. That will be the daily average true range, the expected range. So let's say it's 50 points. If we did 20% ATR, not that good at math, but that'd be about $10. 10 points. So there's your two criteria. Does it quickly go against you? Okay. And is it significantly going against you? If either of those both those criteria are met, you're going to look to try to gracefully exit. Now, here's how you implement a graceful exit. You are looking for the first meaningful or even slight retracement in your favor, back from the maximum adverse excursion, how far it's going against you, to coming back in. A lot of the time when you get good at this, you'll be able to scratch a lot of these trades, because if you're on them right away and the market moves quickly against you, you can actually look to scratch it. Now, I'm going to go through, I know that almost all of these trades were winners today until there was a particular trade that I did gracefully exit, and I'll show you that in just a moment. So let's just start going across here. We'll just take a look, and I'm just going to go like this. Okay, so the first entry was here right before I started the room, so I just scratched that one because we were outside. Don't worry about the entry criteria or whatever. There's a sell right there and a profit. Okay, so sell and profit, no reason. So again, I got short here. It went up a little bit, but it essentially pretty quickly went in my favor. This doesn't qualify for a graceful exit. Took a profit right here. That's fine. Okay. There's a long. Okay. So here's a long right here. And right now it went down, I don't know, 15 points or so. And it did it pretty quickly. Again, for me, not a graceful exit candidate. Now we went up and sold that long. So now we're flat again. Comes back up, moves around. Okay, this is our offer zone when we get up inside that pink line up there. That's our offer zone. I thought I did more trades here. All right, there's a long, okay? Again, didn't go quickly or against me. Sold it for a profit. So far, we're 4-0 or 3-0. There's a short at that pink line. You watch plenty of other videos. There's a cover right there. Don't worry about it. There's another long. There's a cover. There's a long at that green line, which is our VWAP. And you can see, so far I don't have a graceful exit candidate at all, right? All these trades are, there's a cover. Flat right now. There's another long. Okay, now this one right here, now I already saw that it reversed. But if it kept going down more significantly from there, from an entry at 664, I really don't like to put the prices on here, but we have to put the prices on here, because if you're watching this a year from now, the NASDAQ could be 3,000 points higher or lower, and people get all hung up on the price. Don't worry, it has to do with the actual point amount. So here in the NASDAQ, we bought at 664. It went down to 650. So again, but as you can see, it pretty quickly went down. So we had the first criteria, but it really wasn't significant out. It reversed. And there's a profit, so took it off there. And again, the logic behind any of these trades in terms of the entries and the exits has nothing to do with the purpose of this video. I'm trying to get to one in which it went quickly against me and profoundly against me, or significantly against me. All right, there's another short up there. I know that might be a little bit hard to see. That's at 770 and came down and took profit, 688. There's another short, and there's another one. So here's a two lot here, okay? So here's a two lot, one entry at that level, which we call our plus ones, another entry at this swing level right here. So now I have a two lot on, and I covered one as it came back. And now, so we're still short one. Now we're short two. This, I think, is the graceful exit candidate. Okay, here we go. I am now short two. that second one from 712, and this thing is, it's rocking, okay? So we are now, again, from let's say 712s up to 733s really quick. In terms of time, this is about a minute. So I am now in graceful exit mode. And here's what's powerful about this is that, yes, there's a little bit of discretion, or a good amount, depends on what you think, around doing this. And some of you might just say, well, for me, it's easier to just always have fixed stops or dynamic stops or some form of stop, so I don't have to think about this. No problem with that. Absolutely, you need to have stops. I'll do a whole other series of videos on risk management techniques for this particular trading style. But in this particular style, you can kind of blend those two. You can go with what we would call a catastrophic stop, one that's far away from price, so you're not getting stopped out on these moves. And the reason we don't want to get stopped out on these adverse moves when they happen quickly is because we want to give ourselves the opportunity to implement this technique and do something dynamic. This is what we're really good at, and computers are not necessarily, well, computers are super good at implementing whatever logic you give them. The problem is there's so many variables and dynamic things that are happening in the markets on a minute-by-minute basis that unless you had thousands of various variables going into your strategy, it'd be very difficult to automate that kind of stuff. So we're pretty good at this. So could I just have had a stop that was resting up above and I'd already be stopped out? Yes, that's one way you can do this. But now this one is going to qualify for a graceful exit. Now, keep in mind, I do not have a stop here. Now, there's one thing that I'm just noticing here, which is one final criteria, but this would be required. You'd have to have some additional knowledge about these particular strategies, which I'm not going to go into here. But the third criteria potentially for when you want to be looking to gracefully exit is if you have the risk budget available and you have another valid entry point above or below the prices that you have. For me, I don't even consider that a graceful exit. So while I know that I think that I looked to gracefully exit this, if I'm remembering what happened today, up here at this line here where you see 740 is another level. So when I have another level above, I would most often be adding another contract at that level. Again, all things considered, do I have the risk budget? Am I up on the day? There's other considerations. The thing that you'll know if you're watching much of my training and lessons is, what are my favorite two words? It depends. But in this case now, I'm short a 2 lot, and I believe that I've gone into graceful exit mode, even though there's an opportunity for me to rest another order here at 740. Let's see if I actually did do another trade at 740. I don't remember. So this is just a replay of the executions. It's not showing you where my orders were operating. Okay, so there you go. I am short a 2 lot, and this is the first meaningful retracement that happened. Okay, and I gracefully exited right there. That would be considered a graceful exit. Is it a scratch on this whole position? No, but what it is it's the first meaningful retracement in my direction. Rod, I can't measure meaningful. What the F with meaningful? You got to help me out here. Okay, this is the element of it that is the feel. I'm going to use the F word on you. I'm going to tell you the F word. This is a little bit of the feel. Is it half a back to where you started? Is it have to be, within spitting distance of your original entry so you can scratch every single trade? There are a lot of people that manage to almost scratch every one of their graceful exits because they're on it very quickly. I don't use that as my criteria. I'm just saying, okay, the market came from 712s up here to basically 735-ish, and then finally came down to, up, made a lower high, made another lower high. That's why I have these swings in here, because I can visually see that. And as soon as I got a brick wick reversal right here, I gracefully exited, okay? Now, I still am short 1 if my math is correct. So now I added back in at a better price. Now, the way to really run this strategy is you would have waited for a touch of this level up here. Now I'm short again and covered here. Now this entire trade is probably either break even or profitable at this point. Still short 1, and let's see where I cover it. Boom. So huge, big profitable trade. Okay. The other thing that is great about the graceful exit is that for most traders, what I have found, and the reason I teach and train on this is because most of our psychology is similar, which is it's just good to clear your head and give you the opportunity to get back in at a better price. And yes, there will absolutely be times in which you potentially gracefully exit here your entire position, and then it goes a little higher and then it falls, and you would have been right. And it's the old woulda, coulda, shoulda, why did I do that? Or, my rules are I'm just going to have my stop and have my target and sit on my hands, and come hell or high water, it's going to hit one or hit the other. It's super hard to do. It's just really hard to do. What is actually easier to do is to try to implement these criteria in real time and see how it works for you. So I encourage you to do that. If you have any questions about this, I'm going to now be creating community around where I post these videos. So please do leave a little comment there, and we can engage in it right there. Of course, TDG members, there's plenty of places where you can engage in community. And let's see so I'm now flat. All right. Now, that sell right there at 691, I can't tell you what that is. I'm not exactly sure. Maybe we were looking left, but I'm short now. There's a short again. There's short again. Now I'm short 3 and covered 1, short 2, covered another, short 1. And see if we got VWAP on this next one. Sold another one, covered. So what a day. Am I cherry picking making this video about gracefully exiting on a day in which you didn't really have to gracefully exit that much? And I knew, I kind of remember the stats here. I'm pretty sure they were essentially 100% winning trades from entry to exit. So if you talk about the actual entry to exit, if I was campaigning around price, it was 100% winning trades in the MNQ today, trading the stay in your lane strategy. Of course, that's not sustainable. We can't do that. But what is sustainable is implementing this concept of a graceful exit, giving yourself some flexibility. We call it situational fluency, so that you begin to understand how to get more comfortable being uncomfortable, and how to make the best decision you can with incomplete information, because none of us know what's going to happen on any individual trade at any particular time. But what we do have is, when you combine what we call our magic lines and our fun stuff, like, it puts the limit orders on the lines, or else it gets the hose again. Just believe in the strategy and then dance around it when you have to. When the market quickly and significantly moves against you, look to gracefully exit. That'll be it for this particular lesson. Hope you found it helpful. Again, let's engage around whatever engagement points there are in this video. Stay green, trade like a minute. We'll see you at the next lesson.